Hi, my name's Josh Mahony, Chief Market Analyst at Scope Markets. Certainly with earnings season in full swing, markets will be paying particular attention to this upcoming week. And that's because we see big tech really come to the fore. Equity markets in the US have been hitting record highs of late, and that has by and large been facilitated by the fact that we have got big tech performing well. Certainly a couple of other companies, the likes of TSM in particular, pointing towards strength in the semiconductor space, and that has provided a boost for the likes of Nvidia and alike. But will we see that AI boost come to fruition, or are we going to see revenues start to flounder and fall short of expectations? Let's look into how things have been playing out thus far in terms of earnings season. Certainly, if we look at the breakdown across the S&P 500, we can see that 16% of that index has reported thus far. We see a disparity between how things have been playing out in terms of earnings, where we see certainly a significant amount of strength and most companies managing to beat on earnings. But more changeable from a revenue perspective, energy in particular really underperforming, and energy will be a big focus for this week ahead. In terms of the areas that have seen a significant amount reported, financials, we've seen 47% report, 23% of the non-cyclicals, and we've seen 20% of the industrials report, but plenty to sink our teeth into yet. Bearing in mind, we generally see more volatility at the early part of earnings season because of the fact that markets are really trying to glean what their expectations should be for the rest of a sector, according to how the first one or two companies report. So certainly we're still within that sweet spot where we're expecting to see plenty of volatility around these earnings reports. In terms of the companies to look out for, we essentially, as is often the case, see very little on Monday. Tuesday, we see Microsoft and Alphabet heading up things from a tech perspective. Wednesday, we see MasterCard as a particularly interesting one to watch. And Boeing, of course, have been hitting the headlines of late with the problems that they've been having with their latest 737 MAX 9. And then on Thursday, we see Apple and Amazon and Meta, again, tech back in focus, and closing out the week with a big focus on the energy sector with the likes of ExxonMobil and Chevron both reporting. I want to take you through how things are laying up in terms of the revenues and earnings before we then get into the charts. The first stock that I'm looking at is Microsoft. Of course, we're expecting big growth in terms of their AI revenues. The idea that we're going to see a big boost from AI does provide that basis for people to keep bidding up the Microsoft share price. And if we fall short of expectations, or we start to see that growth slow down rather than accelerate, we could really see this stock come under pressure. But nonetheless, we haven't necessarily seen that quite yet. And all signs point towards this being the relative infancy of the AI boom. So certainly this will be one to watch. In terms of the numbers, we're looking for 276 on the EPS figure, and we're looking for 61.12 billion on the revenues number. Next, we're going to be looking at the Apple share price. Certainly, this is a company that has struggled because of question marks around about supply chain, around about how inflation has touched margins, and around about their demand coming from the China side of the business, given everything that's happening over in China at the moment. In terms of their revenues, we have seen them really floundering of late. And that decline in terms of revenues that we did see over successive quarters is expected to reverse with a significant boost expected this time around. Remember, we're looking at a company that is relatively cyclical, and the release of the new iPhone does provide that potential boost. So how much is that boost going to be? That's why this earnings report is particularly notable from a revenue standpoint in particular. Then looking in terms of EPS, 210. So we're also expecting to see a nice year-on-year boost in terms of earnings as well. So let's see exactly how things would shape up after the stock has seen a significant rebound of late. And then finally, I wanted to look at MasterCard. I know there's plenty of other big tech out there, but I think MasterCard is a really interesting one because we're looking at a company that really does benefit from the inflation that has been inherent within the global economy of late. That boosts the value of transactions that are undertaken, and that has essentially boosted the revenues for this company. A nice strong uptrend for MasterCard, and that does benefit traders given the relative consistency of those moves. In terms of what we're expecting, 308 for the EPS figure for the fourth quarter. That is significantly higher than the 265 seen this time last year. And then in terms of the revenues figure, 648 expected. That's actually a touch lower than the third quarter figure. But when we're looking at the comparative, looking compared to the fourth quarter last time around, significantly higher than the 582 seen in Q4 2022. Now, I want to show you how things stand from a charting perspective. This is the Microsoft weekly chart. We can see the breakout that has taken place at the beginning of this year. Of course, markets had been struggling somewhat, but that hasn't necessarily taken shape for Microsoft. You can see here on the daily time frame, this nice surge bringing us through 384. So we've seen the breakout following this period of consolidation that dominated the back end of last year. And so it's a question mark of, do we see another pullback before we look for a retest and a push higher, or do we just continue on this uptrend? The hourly time frame shows you this nice bullish trend playing out over the course of the past week and a bit. And certainly the question mark of whether we're going to see a breakdown really should be answered by whether we see this 393 level broken or not. As long as we remain above that level, then the uptrend remains in play on an intraday basis. A breakback below that level looks for a wider retracement to come into play. I don't necessarily think that we're going to see a breakdown through 363. So near-term downside will either be capped in terms of an intraday move by that 393, or else a break below that level looks for the wider retracement, and then you're looking at 384 as that prior resistance level turned into potential support. But certainly the trend is your friend for this stock, and that is always the way you want to be playing it, is looking for highly trending markets and looking for how that is going to play out in your favor. Then looking at the Apple share price, we can see that the company certainly did struggle on a number of occasions over the course of the past 6 months. We saw the pullback in the second half of last year, rebounding into year end. And then we also saw this stock coming under pressure at the beginning of this year to an extent that we didn't necessarily see for Microsoft. But this little double bottom formation following that retracement has now given us a nice surge as we head in towards earnings. A little bit of profit taking coming into play at the moment. And so there's some question marks certainly around about this stock and whether we are going to see revenues really ramp up in a meaningful manner or not. So in terms of near-term price action, we're certainly going to want to see 199 taken out to prove that this retracement phase is over. But for the near term, you're looking out for, here we go, we're looking out for a potential breakdown through this support level at 193 to point towards a wider retracement. Until that level's taken out, near-term pullbacks are healthy, and they're something that you're going to regularly see within the markets. People see them as opportunities for markets that have inherent strength. And certainly if you look over the long term, this is a stock that generally does push onwards and upwards and into record highs. Are we going to see demand for the newest iPhone providing the basis for another push into that resistance level of 199 and into new highs? Well, certainly this earnings report should provide the basis for us to know whether that is going to occur. And finally, looking at the chart for MasterCard, like I said, it has really benefited from the inflation boom that has essentially just driven up the value of their transactions. And so we're looking for more of the same from this stock. 425 is the near-term swing low. So if we break below that level, it starts to look like we're unwinding. But near-term downside just looks like more of the same until then, because I can keep drawing those swing lows all the way down. We keep creating higher lows ever since that low that we saw here in October. So the trend is certainly your friend at the moment. And until we see a breakdown through that support level, near-term downside looks like it could be bought up. Look out for those earnings, though. Are we going to see those retail sales and those consumption numbers continue to strengthen this stock that has been a big outperformer at a time when other companies have suffered at the hands of higher inflation and lower margins? Well, that hasn't necessarily been too much of a problem for MasterCard. And that higher inflation has driven up the value of retail sales, despite the fact that we're seeing volumes lower. That has hurt some companies, not necessarily too much of a problem for MasterCard. So certainly that's going to be another key market to be looking out for within a earnings report that certainly is going to be particularly interesting and dominated by big tech, but also capping off the week with big oil.